Everyone, it's Zach with Palantir Research. We got breaking news. Palantir was not announced that they'll be added to the S&P 500 officially in the latest quarter's rebalance here. As you can see by the price for some, this was a long-awaited day for March 1st. Stock is falling currently in after hours around 2%. It's not that much, honestly. I mean, for a longer-term shareholder, this is more of a rounding error, to be honest, after the huge run-up. So we'll see how this continues into the next week, though, on official trading hours. I don't think this is a bad event, honestly, since they're still eligible. Now, for some background, just for logistics, they would have been officially added to the index for trading on March 18th if they were to be announced, of course, so it's not instantaneous as well. But since it has not happened, we'll have to wait another quarter to see if that will finally be it for inclusion or maybe even another one. So it's no big deal to me, but when it does happen, I want to talk about why it is so important for Palantir's business, and I'm not only talking about the stock itself. So context-wise, from where I'm coming from, the big thing was them just actually being eligible because it shows stability in their business. Now, this is just the final topper to make it official once they're announced and actually added in, but even if pushed further, still good on them being able to maintain this and have that eligibility. But here are those reasons why. So first, stability in holding the stock. Now, this is related to it. Being included in the index when there are numerous index funds products by a lot of institutions means that to keep the small percentage that Palantir is going to be in conjunction to the index is necessary. Now, there'll be a very tiny portion, less than 1%, but still this level of holding is a real factor with implications. Now, with the rise of passive investing, and even for myself with my retirement accounts like in my 401ks with limited options, index funds have become widespread and the easy to choose or even automated default choice for those who just want to take advantage and the tried and true approach of dollar cost averaging into the market for retirement over a long period of time. So I'm not saying this has to explode the stock, but the sense of stability this brings as being part of almost a default option for the mass public is quite something. Now, second is reputation, and this is much more important to me. Palantir's reputation, not only for their products, is important, but also their reputation of being sustainable to survive and continue to serve clients. We know the first GAAP profitable quarter they had relied on a stepped up basis, and interest income helped a lot too. But with the last 4 quarters, Palantir's GAAP profitability not only extends to not needing any stepped up basis, but also they're operationally GAAP profitable, meaning this is before interest income, meaning their business makes money. And as long as this keeps expanding on the top line, they have the right amount of operating expenses to continue being GAAP profitable, even if interest rates drastically change to being unattractive to park cash. Now, I'm not assuming that's going to happen, but in a worst case scenario, if it does, they'll still be fine. So not that every client too is even looking at their financials that closely, but being in the S&P and requiring profitability as a metric basically means as a proxy, clients already understand your stability is there financially. And we know this is for the top companies around the world. So adding that to a checkbox that you're in the S&P might make them slightly more attractive for customers to sign on, as well as being on the radar of executives because your name just has that much more chances of a company coming up in conversation, being part of the S&P, as well as the news cycle around, like, say, CNBC. That's obviously going to be big news once Palantir is added. So more for the second reason that I think it's important for S&P inclusion, but not vital to the current day. I'm neutral on the news that they're not included in the S&P with its valuation now. This is the long game, considering they're still just above $2 billion in revenue and they're trading at this valuation. And for the inclusion, it honestly wasn't a long time coming, considering their fourth quarter of GAAP profitability was only 2 quarters ago. So being able to make it in so quickly and getting this out of the way would have been awesome, of course, but not a necessity right now. So I still see it as symbolic by nature in my books, but it does push their actual business once that's going to happen. And that's what I'm looking forward to when it actually does. And for investors, that should be the priority as well. But what are your thoughts though on this? Are you disappointed, neutral like me, or even happy? Let me know below, and I'll see you in the next video.